Revolutionising Credit and Rewards, Lynn Dye and Razink on Web3 Payment Solutions, Part 2. In this episode, Dr. Jemma Green continues her conversation with Lynn Dye of Superlogic and Razink of Spree, exploring how Web3 technology is transforming traditional credit and reward systems, from tackling predatory lending practices to creating innovative solutions for collateralised crypto loans. They discuss how blockchain technology can make financial services more accessible and equitable while delivering better value to both merchants and consumers. I'm your co-host Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
In terms of credit card companies can't help themselves in terms of using stablecoins but still charge high fees, I'm curious to hear from both of you about what's your view on, as there is more competition, because there's not really an imperative for them to do that when it's just a duopoly, but as there is more competition, what do you think about what will happen in terms of perhaps them just reducing their fees to keep themselves in the game, and the kind of immunization that you've created around a really differential product, in terms of the commercial model and the offering to consumers?
Yeah, maybe I can kind of kick it off. It kind of reminds me of something we experienced recently within the AI space, which is sort of the disruption with DeepSeek R1. And when that launched, there was this massive scare in the American stock market because oh my goodness, China is just as good as OpenAI and Anthropic and all these American centralized organizations. And so that disruption kind of was oh man, maybe as if I'm Sam Altman or Gemini or Anthropic or wherever these AI labs, I don't have the safety net of going slow and maybe even worrying about certain safety things, because I need to get to market because I'm getting disrupted as we speak, and NVIDIA's stock is down and all these bad things are happening for American AI until now GPT 4.5 came out recently. I know there's been Sonnet 3.7. As someone who uses these models all the time, these innovations are palpable, and I wouldn't be surprised if they were kind of milking some of the value from the O1 Pro, these other less than perfect models, but good enough to where people are still paying $200 a month. And so I think about that in the context of using stables as an alternative form of payments, and that's already happening, right? Robinhood is using stablecoins for settlement with their partners on the weekend because they can't settle in cash through the conventional systems. And so that's already happening, and they're probably saving, 10, 20, 30x on those fees, because all you're paying, depending on the volume of the dollars, is just a gas fee, right? And so that's way, way, way more efficient. You're likely going to see that for the internal use case. And then the external use case, I don't think that these sort of incumbents are going to have a choice, right? They're going to just do it. They're going to charge what they charge, and then they're going to get disrupted, and then they're going to have to cut their prices down by requirement because they're getting disrupted. Their market share is being sort of siphoned off, and they need to become competitive. And in that situation, that's a big win for consumers because they don't have to fight over who's better, who's worse. They just go for whatever's cheap. And Lynn talked about the Walmart use case. They are sort of a race to the bottom. They don't have big margins, but they do big volumes. Once payments becomes commoditized, volume is going to go way up on stables. The fees are going to go way down, and then consumers are going to win.
Yeah, I think to a certain extent, Carter may be very generous in comparing traditional payments companies to OpenAI, right? I think OpenAI and Gemini and Anthropic, they're fundamentally still very tech company DNA, and they are really pre-profitability companies. So they do have a sense of urgency to pivot quickly and keep up. I think the sense, knowing and working with all the banks, is that they are almost in a undisruptible place, right? So, I think the kind of the generation 2 fintech layers on top of these networks are already doing things like Stripe certainly is a big player, and they basically have announced their stablecoin processing fee would be 1.75%. So there's already a dropping price, but that's somewhere between what really the market premium we think cost could bear with kind of the traditional guide rails of 2.5% is the golden rule, right? So it does show that the Stripes of the world are kind of stuck with this considering their own company's profitability versus what is truly the market value or the cost that needs to operate a pure stablecoin powered like commerce system. So yeah, I mean, I think the price will be the first thing to be disrupted, right? Because that is the thing that blockchain does best, is frictionless instant settlement and trustless and removing all of the middleman layers. And merchants and consumer probably be the first beneficiary of that. And that's a kind of like exciting future, right?
And then if they do drop their fees, like I think you were saying earlier before we got online that the fee that Spree will charge Carter is around 0.75%. Say the credit card companies for stablecoin settlement charge a similar fee. Talk us about, like, I guess a disruptive innovation theory perspective, how you would see that fight playing out, including the credit card companies and perhaps the other settlement platforms as well.
Oh yeah, for sure. I think that's a really interesting concept because when you're a centralized organization, you tend to be a little bit more efficient at sort of decentralized protocols. But you also have politics of people sort of feeling like there's sort of a status quo they need to uphold, historically at least. And so thankfully within the infrastructure we can change that through some governance process to decrease those fees, right? Let's say the Visa or MasterCard come down to 1%. We need to feel competitive. We'll drop that from 75 basis points to 10, maybe. I don't know, right? It kind of depends on the will of the merchants and the will of our node operators, sort of service providers that run and use Spree. And if we want to decrease that fee, we can. And thankfully, that's not our primary revenue source, right? We're trying to build sort of a commerce DeFi layer. And that's going to be a lot more valuable than the conversion, the settlement fee itself. It's the things we can build on top of it. It's not even going to be really comparable. And the margin there is going to be unlocking new forms of decentralized finance use cases within commerce. You know, that 75 bips could probably go down to 0 and we would be totally fine.
Yeah, I want to give an example. So this is the other behind the curtain, but this is public knowledge, right? So, you know, like Visa MasterCard network charges like 2.5%, and American Express is a more premium network with premium kind of cardholders and merchants. So they charge a little over 3%. So it was recently announced, Delta recently revealed, because Delta issued a Delta co-branded American Express card, right? So it was recently revealed that Delta receives, I think, $7 billion a year payments from American Express for that card. So what's that payment for? The payment is basically 6% of all transactions that is happen on that credit card. Doesn't matter if you buy an airline ticket or you buy a cup of coffee. So 6%. How can American Express afford to pay Delta 6% while it's only collecting 3.5% from the merchants? But it's a very, very profitable relationship because at the end of the day, what people don't see is merchant interchange fees is only a small percentage of the revenue that payment networks generate. It generates a lot more revenue of credit and lending to its cardholders, right? So, and that's done for the most part in a almost predatory way.
Yes.
In the US, people are getting charged, doesn't matter what bank you are getting a credit card. If you do not pay your balance in full within 20 days, you are getting charged a 26 to 30+% annual interest. US household credit card debt is at an all-time high. And that is like a self-fulfilling like downward spiral, right? Because people are getting trapped in paying 30% interest for their purchases. That is like they can never really dig out of that hole. You're talking about why like there's such income disparities between the rich and poor. So I think it's like the practices to make these public corporations that runs payment profitable is at the expense of both merchants and consumers, right? But there is huge profit margins in the lending layer, in the credit issuance layer. And we basically essentially have thought about this for a long time, and Carter and team basically on the Spree side really have came up with this methodology of like this idea of Spree credit that could be done at potentially at 0% interest to the consumers while still make a margin and a yield for the network.
Wow.
So Superlogic is a merchant Bookit is a merchant on top of this network and we're looking to make a margin or make a profit. But if we can do so without literally killing our own consumers, right? Because we want our users and members to be financially healthy and can make multiple purchases and not like cripple them with debt on purchases they couldn't make. So if that is the case through this network, that is a very compelling story for all major kind of retailers, right? So if you think about the average user profile at a Walmart that shops at a Walmart, right? It is not a super wealthy individual, right? So, and in order for Walmart to have a sustainable business, although they will love for their user to spend money they have or money they don't have on a credit card, if that gets that user into a downward spiral of never being able to afford to pay back that debt, eventually that hurts Walmart's bottom line on like repeat shopping, right? So this layer is kind of something we think that could be really disrupted with kind of a new wave of technology that allows a network to make a margin without really being like predatory to end users.
Thanks for explaining, like, yeah, the whole credit card ecosystem and the big problem, lurking problem there. You can see that at the aggregate layer with consumer debt being at all-time highs. What's the product, the offering at the consumer end, Carter, that Spree has that offers a solution to that?
Yeah, we're trying to sort of target the Web3 native as sort of a beachhead growth strategy because we're not trying to pander to everyone, right? The Web2 natives, this is sort of a complicated idea and oftentimes scary. But for people who are familiar with the space, they have probably heard of something like Aave or Morpho. I know Coinbase just announced a deal with Morpho where they allow you to take basically loans against your Bitcoin held in Coinbase. And that's really attractive, right? If I want to use the liquidity in my Bitcoin, very similar to a home equity line of credit, I can create a line of credit or a loan against my assets and then draw money from that. And so that's functioning as collateral. And so Bitcoin serves as a good collateral asset to draw credit against. So what we're building with Spree is something very similar, where instead of going through a Coinbase, you use a decentralized loan system to put up an asset as collateral. Could be a Bitcoin, could be Ethereum, could be a Solana, could be even random coins that aren't very popular, but we support. And then you can buy flights, hotels, cruises, anything on bookit.com that, we're talking about earlier, that premium Amazon meets travel agency experience. You can buy a real world commerce, real world goods and services with an asset that you don't necessarily have to sell, have to liquidate. And if you're in the States, that's a big value add because that's a taxable event. And so there's systems around that. Instead of selling it, you can get a loan out. And that's a very common Web2 sort of traditional finance product.
Yeah, if you think this is the combination of like kind of the Bookit marketplace and how we envision this actually bringing mass consumers, right? So we know like majority of the world, have not like purchased Bitcoin yet. And that is like compared to a lot of other saving mechanisms, a potential way for you to actually accumulate and get out of debt, right? Like the US government is thinking about using this to like buy and hold and get out of national debt as well. So, we were just in the Philippines together and we were talking about kind of the use case why like, okay, if I live like below poverty or a low middle class income and I finally decided I'm going to save like $500 in Bitcoin, right? And that's viewed as I want this to accumulate value and growing value over time. And this happens in the US as well, right? Like newbie that just basically are like, okay, I'm not going to get ahead just working a hourly job or my 9 to 5 and need to save and put in S&P, or I could put in diversify portfolio and put some in Bitcoin. And now like it's summer coming up, my kids are out of school and we need to plan a family trip, right? It doesn't have to be anything fancy, but now I had to make a decision. All my savings are in Bitcoin. Do I sell Bitcoin at more lower value that I can have like take my family on this experience, or like that's the choice, or do I hold Bitcoin and not take a vacation? So you don't have to do that, right? Like, so we imagine that like, hey, we can actually provide you a credit line for locking up your Bitcoin and not sell. And, there's interest that you to be involved, but guess what? When you actually purchase a vacation like the Bookit.com merchants have a margin and commission they're providing to us. Instead of earning rewards, we can apply that as to give you an interest-free loan. So you don't have to sell when Bitcoin depressed. You can wait until it appreciates, and like you can have time to then pay off that debt instead of paying 30% interest on taking out that same trip on your credit card, right?
Yeah.
So it actually brings like the average consumer in that otherwise would never have held any cryptocurrencies, and also do it in a way that's like not predatory. Like we don't want you to get into debt, right? Because I don't want to repossess your Bitcoin or whatever, right? We want you to be able to learn how to have that as a store of value while not like subject yourself to like 29% interest. So that's a very competitive product, I think, to traditional credit insurance, right? And traditional credit insurance have a lot of risk associated with it. I think to a certain extent, maybe 29% isn't justified, but some high interest is somewhat justified because of default rate. Like it's done on this idea of a credit score and the bank's evaluation of your future ability to pay. Well, this is mitigated, right? Like you already hold Bitcoin and Bitcoin is collateralized. And we know that is a store of value. So we don't have to actually question and look at a bunch of scores on like all the other reasons why you may or may not pay that back, right? So it's all run by computer algorithm, right? So you can be very conservative, take out a 40% loan to asset value, and probably in this environment never really get liquidated. And yeah, so that's kind of like how we're envisioning this.
Another aspect of that, this is like the offering at the consumer level. What's that the commercial model for Spree to capture value associated with that? How does Spree make money?
Yeah. So the main use case here is that there's a spread between the interest rate you're earning on the lending and then the interest you're paying on the borrowing. Now, oftentimes it is nowhere close to the 30%, 29 some odd percent the credit cards are giving or taking rather from the loan you're going through them to access. I mean, like if you go on Aave.com right now, which is like one of the biggest lending protocols in the space, I think they're doing 35 billion right now in total volume or total value locked. That loan value is 4%. So if you wanted to access this credit line, you're paying like less than, if it's 30% there, you're getting less than 10%, even if it's like at the worst, right? I think it peaked during this crazy bull market. It was at like 12 for a while. And that's still way better than accessing your conventional credit card. So you're getting access to tap into this sort of merchant system. You're using these rewards through Spree and Spree points to facilitate either paying down your debt because you're getting 30%, 20% cash back. That functions as essentially a commerce stable token, which you can use to either pay that down, right? So you went, say, $100, you got $25 back. You can now immediately reduce that loan value down to $75, or you can sort of facilitate sort of this synthetic 0% APY where you're using that cash back to pay the interest off and extend the lifetime of the loan, which is a really fascinating use case around lending, because right now you have to have that collateralized asset in the system. Now these rewards allow you to tap in, and that whole process is generating fees for the ecosystem because they're tapping into credit there.
Yeah. For the merchants, regardless, if a new purchase, right? So if the Wynn Resort is willing to pay out 15% rewards for you to book that trip, doesn't matter if you do that using from a collateralized credit line or paying like live settlement right now, that 15% of rewards on purchase is still paid out, right? Like, so, and that instead of that being a form of rewards back to you, 15% for let's say like a 3-month or a 6-month time for you to be able to pay that back, that's a 30-60% annualized yield, right? So there's a lot of potential profitability to the network for facilitating even at a 0% lending to the consumer.
Got it. Yeah, it's really very novel use of the reward points to offset interest. I wanted to ask before we wrap up your favorite songs, but just before we did move to that more social topic, I wanted to ask, is there anything else you'd like to share about the Spree product or the offering overall that would be interesting for the listeners to have like a really comprehensive view?
I can get started. I think it kind of pegs into what Lynn has been working on as of late and some big announcements recently. I think right now on the Spree side, we're trying to plug into different projects launching within the Web3 ecosystem. And so kind of adjacent to what we just talked about, one really compelling use case that we had a lot of really good conversations with over the past couple of weeks in ETH Denver has been around accessing this line of credit, but not having to sell tokens to give incentives. And so imagine you're in the situation, you're a protocol, you're a project founder in the blockchain space, and you have a token and you want to do incentives. You want people to come to your project and to use it. And so you could try to give out your token, but the issue is that when you give a token out through an airdrop, most people sell it. And so what you're doing is you're actually decreasing the price and the value of the token in the long run. And so a system that we're building is to allow protocol founders to tap into this line of credit and say collateralize some amount of tokens and then give out incentives in Spree points that can be used for your community to access flights, hotels, resorts, whatever it is that you want to give out. Real world commerce use case for your token, you're giving out is incentives, and you don't have to pay any interest until someone goes and spends it. So it's sort of a protocol level loyalty point that you don't have to pay for until someone has actually spent that. And that extends the value of your token and the liquidity within your system significantly. And so we're looking for early access partners that want to try to tap into this project. Reach out to us at Spree Finance on Twitter, and I'd love to chat.
Lovely. Thank you.
So I have a much simpler offer. So bookit.com, our travel, entertainment, and retail marketplace, it's actually in pre-registration mode. So it's meant to be kind of a members only marketplace. But for a limited time, we are giving away a gold membership, which is $99 a year for completely free, complimentary for anybody that pre-registers. So it's going to launch in a couple of weeks. So go pre-register now. Just go to bookit.com. And everybody gets a free gold membership, which unlocks tons of offers and rewards and access to everything back on the site. So
Awesome. Thank you.
Thanks.
I just wanted to jump in and just ask as well of both of you. Talked a lot about all of the credit side of things as well, but one of the things that I've noticed over the years is the value of rewards points has dropped significantly. You know, I remember the time when you would go in and you'd have 100,000 points and that would buy you a ticket around the world. Now that barely buys you a 1 hour flight somewhere. And is the value of the rewards points going to change and what consumers will get out of it?
yeah, in centralized rewards accounts, it's like essentially the corporation that issued the points had full power to essentially inflate the value anytime they want. Like Marriott recently just did this. We took 10 years to plan this trip. It was a once in a lifetime trip to the Maldives last year. And we did it, and we basically were able to get like this incredible resort setting for 240,000 points, right? So that same exact resort, quietly Marriott increased the price. I look up the exact same week this year is now 440,000. So that's a 45% inflation in 1 year. That is far outpaces any inflation in most countries, right? So what we are doing is pegging, right? Like Spree points is pegged to the US dollar. Now, there's still some inflation going on with the US dollar, but for every 100 points, it's always backed by $1 US. And it's not arbitrarily changed by the merchants, right? So that's a kind of step in the right direction. But if you have your regular centralized rewards point in your account, the best thing to do is don't hoard them, spend them.
Yeah, I think that trip that you went on has inspired me and I hope to copy you. Gentlemen, tell us your favorite song of the moment.
I suppose I can kind of start. I just went to a concert. A friend of mine took me to Charles Wesley Godwin, kind of this country, Family Ties. I've been playing that a lot. Very good song. Recommended if you're into country or sort of that vibe.
Amazing. Thank you.
I couldn't get this song out of my head since the trip to the Philippines is I Got a Feeling by the Black Eyed Peas, but to Guns N' Roses Massorum drums, right? So to rock and roll drums, that was incredible.
Yeah, and Sweet Child of Mine.
Yes, absolutely.
Thank you so much for joining us on UnBlock'd. And it's such a complicated world, the whole credit cards and payments. And I just think you really explained it so clearly so that people can understand what's going on and see also what is possible for them in terms of, engaging with Booker.com and getting rewarded in a whole new way and being able to buy things without getting into predatory lending situations. So gentlemen, just congratulations on all of your pioneering entrepreneurial work and look forward to seeing your great successes.
Yeah, thanks, Jemma.
Yeah, thanks for having us.
That's all for this episode of UnBlock'd. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcasts Done For You. We look forward to your company next time on UnBlock'd.